What if I told you a major tech company just made a massive, decades-long bet on the future, one that almost nobody in Silicon Valley sees coming? Today, we're diving into Oracle's eye-popping, AI-driven bond deal and what makes it so unique. Stick around, because by the end of this video, you'll know exactly why Wall Street is buzzing and whether this could be a sign of more change to come in tech financing. Let's get right into it. Oracle, a tech giant best known for its database software and cloud services, just raised eyebrows by issuing a bond deal so big and so unusual that it has analysts talking. We're not just talking about the size here, though it's massive, at over $10 billion. What really has people scratching their heads is the length of the deal. Parts of this bond won't mature for 40 years. Now, if you're not familiar with bond markets, here's the quick version. Companies issue bonds to borrow money from investors. In return, they promise to pay periodic interest. Think of it as a regular paycheck, plus pay back the original amount, called the principal, when the bond matures. The length until maturity can vary. For most tech companies, it's pretty short, typically 5, 10, or maybe 20 years. But 40 years? That's almost unheard of in tech. Why? Because technology changes fast. Think about it. 40 years ago, computers were the size of rooms. The internet didn't exist in people's homes. Apple was barely getting started. The idea of predicting where a tech company will be in 2064 seems, frankly, impossible. That's why most tech firms avoid locking in debt for so long. It's a big leap of faith, both for Oracle and for the investors who buy these bonds. So, why did Oracle do it? 2 words: artificial intelligence. Oracle, like many other tech giants, is racing to capture a piece of the rapidly growing AI market. That means investing huge amounts in data centers, cloud infrastructure, and research. All of that costs money, lots of it. By issuing these long-term bonds, Oracle locks in today's borrowing costs, giving them a predictable, stable way to finance their AI ambitions for decades. But here's the kicker: this isn't just about Oracle's needs. The market was ready for it. Investors lined up to buy these bonds. Why? Because in a world of economic uncertainty and rising interest rates, many big investors, pension funds, insurance companies, are desperate for long-term, reliable returns. A 40-year bond from a well-established tech firm like Oracle is actually pretty attractive, especially compared to riskier bets. Let's put some numbers in perspective. Oracle's $10 billion plus bond deal is one of the largest so far this year, and the 40-year portion alone is rare. Most technology companies stick to shorter maturities since their businesses can change overnight. Historically, only stable, slow-moving companies, think utilities, telecoms, or big industrials, would dare to issue bonds that last multiple decades. Tech companies? Not so much. So, what could go right or wrong? If AI continues to boom and Oracle's bets pay off, they could be locking in cheap money for the long haul, fueling innovation and growth. Their investors get paid steady interest for decades, and Oracle gets to supercharge its transformation into an AI powerhouse. But there's risk too. If technology shifts dramatically, or if Oracle's AI investments don't pan out, 40 years is a long time to be on the hook for billions in debt. Remember, even the biggest tech companies can stumble. Think of companies like Yahoo or BlackBerry, who looked unstoppable until they weren't. And there's another angle here. This deal could signal a change in how tech companies think about financing. If Oracle's bold move pays off, don't be surprised if other tech giants start issuing longer-term bonds, using today's money to fund tomorrow's breakthroughs. Let's not forget the broader market impact. Traditionally, when companies issue big, long-term bonds, it can influence interest rates and investors' appetite for risk. If more tech companies follow Oracle's lead, it could mean more stable, long-term investment options, not just for Wall Street, but for everyday investors too, through pension funds and retirement accounts. And it raises some big questions. Are we entering an era where tech companies become as steady as utilities in the eyes of investors? Or is this just a one-off, a reflection of Oracle's unique position and the current AI gold rush? Another interesting point, Oracle's move comes at a time when borrowing costs are volatile and economic uncertainty is high. Locking in funding now could be a defensive play, helping Oracle weather whatever storms might hit the tech sector in the coming decades. So, what's the bottom line for you as an investor? Oracle's jumbo bond deal is a bold, calculated bet on the future of AI and the company's staying power. It's a move that challenges the old rules of tech financing and could shape how other tech giants think about their own growth and stability. If you found this breakdown useful, don't forget to like this video, drop your thoughts in the comments, and subscribe for more clear, no-hype insights on the latest financial moves shaping our world. And here's something to think about. As tech companies start thinking in terms of decades, not just product cycles, are we witnessing the maturing of Silicon Valley or just the beginning of a brand new financial era? Let me know what you think.